Yeah, good morning, guys. So let's just wait for the others, okay? Let's give them like a minute or two, and then we will start with our lesson for today, all right? So, you have time to get some coffee and some water, perhaps, yes? And let's start in a minute or two. Yes, hello, Stephen. Hello, Zia. Yeah, were you guys there last night during the live trading session? I guess some of you, did you guys took note of the dot link? We actually bounced on the areas that we analyzed yesterday. So link was around 5.5. Yeah. Let me try to share my screen last night that we did if, if I'm able to do. Just give me a moment. All right. So, okay. That's really good to hear, Zaya, yeah. Profit with a little scalp. Yeah, profit is profit. That's the thing. Yeah, remember this, guys. I always had this when I was a beginner. You never go broke taking profit. That is just me controlling my greedy side. As a beginner, you are like a baby, like a toddler, that you have no control on your feelings. Diba? Parang ganun. So, with that, we also get like so greedy, and at the same time, if the trade goes negative to us, we go what? Just let it be. It will go back on the entry, right? A very big mistake. So, good morning, Abu. Yeah, it's my first time seeing you here, or just your name. Perhaps you're just a silent watcher, but yeah. Anyhow, welcome, welcome. Okay, so let me share my screen for the link. Yeah, here we go. This was the link that we were studying last night. Actually, it was around 9, diba? And then we ended our session right before it was 10. And then when I ended it, I saw, link drop on the red zone that we were plotting. Remember this last night, yeah? So this is a good quick bounce. And yeah, quick bounce right there. With the dot, similar with dot, I told you guys 4.75. So I managed to get an entry again, 4.75 around here. Yeah, running at this area now. Yeah, so for those who managed to trade with me last night, then, very good, very good. Okay, so just learn how to manage your trade. So with the Pepe that we were trading live talaga last night, yes, it did hit some stop loss. Just a little bit, adjustment that we should have done with the stop loss. But then again, yeah, it did went on our analyzation. It's just that the stop loss was too tight. Yeah. Anyway, so for today, let me okay, so different accounts here since part one. No, very good then, very good. Hello, hello, Jedrick. Yes. Okay, so I guess that's it. Let's start. Mm-hmm. All right, so let me share my screen from here. So for today, again, our topic is what? Is candlestick. That is the basic, okay, most basic part of trading, but do not mistaken it as something to ignore. I myself, I have done that, and it cost me a lot of money, in which I should have studied it. Yes, candlestick is like certain, what do you call this, like those rectangles that we see in the market. So let me show you guys. Yeah, this guy's right here. But there's a deeper knowledge behind it. So before we get into candlestick, let's have a brief history of how it started. So it actually started around very late 200 years ago, I guess, around Japan. So Osaka to be precise. And we have this trader, Japanese trader, who managed to build his wealth all the way till $10 billion. If you put that, I mean, if you say that money now, that is equivalent to 10 million. Yeah, $10 million, no, $10 billion, around there, by just doing what? Doing the candlestick alone. And guys, there was no internet, no communication back then. That was 200 years ago. But then that guy managed to, grew his wealth. So, um, during, that time in Japan, the traders or the merchants, they tried to trade rice. Okay, so they buy, they sell. That is an early form of trading. Yeah, we buy low, we sell high. And Homo, okay, um, he found an idea like, how can I make or how can I gather data? Actually, he's the first one who literally discovered that there is a psychology in the market, like from fear all the way to greed, all the way to optimism, anxiety, fear, all of that, by just doing what? By just observing what he have discovered, which is the candlestick. So back then, we don't have this, we don't have this 1 minute chart, diba? For them, the market opens 8 a.m., it closes 8 a.m. also. Then new cycle starts, right? New price of the market opens like this one, like the daily. Okay, each candle. So this is what he did. But then the problem is, he had a distance problem from Osaka itself. He lives like 600 miles away, I guess. Yeah, around there. So, but he found a way how to get information from Osaka daily, that he was able to note down the opening, the closing, until where did the price went, okay, the highest price and then the lowest price possible. That is what that guy was doing. Let me tell you guys, not just for 1 year, not just for 3 years, for 15 long years. I'm telling you, 15 years, this guy was collecting data every single day. And he formed, that is where the chart, the candlestick chart, has formed. And from there, he was able to know when the market is gonna be like what we have right now, diba? We have the bear market, and right now is the best opportunity to buy. Yes, that is, we can literally thank him for that. That is what made him build his money. He saw from the 15 years data that he got, he saw on his chart, okay, this is the fear area now, it's my time to buy the rice crops. So that's what he did. He bought. Wherein all market, all traders out there, they didn't bought because it was the first crop of the year. They were like, oh, more will come, more will come. But then there's something that happened, that there was a scarcity of rice, and who have all the rice? Homo. Yeah, so that is where he was able, to turn his money all the way to $10 billion by just doing with a candlestick. So yeah, so that's a brief history. It's really good to learn. This is a historical, very powerful type of tool with trading. It is not just like simple candles, guys. It's very Very special, I can say. Yeah, so now let's talk about the candlestick. For our beginners in here, let's start from, from the starting itself. All right. Hmm. Just a moment, guys. It's like my screen is reflecting. Okay, now that is much better. Okay, now, so candlesticks works like this. So there is two parts in a candlestick. I'll change this one for green for now. But yeah, first part of a candlestick is this solid body. Now, this solid body, guys, can be this length, can be that length, can be all the way till up in there. Okay? But for a standard, knowing the anatomy only, we have first right here is what we call the body. Okay, this is the body part. And then the second anatomy that we have for the candlestick is what we call this thin line or wicks. So where are the wicks, miss? Is it like this full thin line? No. This is the area outside of the body. So you can say these guys right here. Yeah, those are the wicks. So the top wick that you're seeing is the high wick, and then the lower part is the low wick. So I'll keep this as simple as possible. Okay. Um, Green color in the chart represents bullish. Okay, market going up. So the red color, guys, represents, market going what? Going down. So bullish, bearish, we can say that. Both of them has body and wicks. Now, now talking about the bullish part, okay, bullish part, guys. Market, okay. Um, where's that one? Yeah, so bullish part, guys. Now, the candlestick, okay, they're just not like a plain candlestick. Remember earlier I mentioned daily Homo will be collecting data, and one candlestick will represent one day for him. But now we have access to 4 hour, we have access to 1 hour, even 1 minute, all the way to seconds chart. So, with that said, one candlestick that you're seeing is representing a session in the chart. So if you're seeing like one candlestick right now and you are in a 4 hour session, meaning this data right here tells you what happened past 4 hour, session. If you are in a 1 hour, let's say this represents 1 hour. So let's just take a 1 hour reference right here. So if this one, we see that, oh, it's closed already. Now the market formed this and it's green. All right. So we can see that the market opened right here. So if you have a green candlestick or a bullish candlestick, the opening of the session is at the lowest part of the body. Okay. So that is our opening. And the closing of the session, okay, I'm talking about sessions, guys, meaning, the 1 hour or the 4 hour session. Right here is the closing. Okay. So let's say during the opening, okay, let's say it opened around 9 a.m. Yes, 9 a.m. Of course, the closing is going to be at 10 a.m. Yes, for a 1 hour session. So, Miss, what does this one represent? The week, right? So, 9 a.m. Now, let's add in the prices. So, let's say at 9 a.m., let's take rice, okay, as example. Oh, today it's around 50. Okay, let's just do dollars. Yeah, $50 per kg. Oh my goodness, that's so expensive, right? $50 per kg of rice. I guess that rice has gold in it. But yeah, but when the time came for 10 a.m., about to close, we close at the price of $60. So there's a price increase. That is why, this one is considered again bullish, the price increase. If you look at a bullish candlestick out there, and if it's green, always look at the bottom. That is where the price has opened, and that is at the top of the body is where the price has closed. So, Miss, now what is the wicks? So the wicks is the prices where, the price where the what do you call this one? Oh yeah, it's here. The lowest price and then the highest price that the session has went. So let's say around here it is around $63, and the lowest price is around $47. You guys get the idea? So, going back to Homo, um, again, he have a day chart. So it tells him if this is Tuesday, he can literally know what happened during the session. Where did the price of the rice open? Where did it close? What is the highest price? What is the lowest price? Is it bullish or is it bearish? Yeah. Later we'll have more example for that. So now, again, this one is a bullish price chart. Now, going on the bearish area right here, if we have a bearish candlestick, this one is the opening, okay? The top most body part of the candlestick, open session. So let's say this one is 9 a.m. We have the closing right around here, okay? So closing, let's say 10 a.m. And during the session, price managed to go all the way up till, let's say, again, just around $63. Okay, just refer on the bullish numbers, guys. Okay, just for an example. And right here, it tells us that the price went all the way till 47. But the main idea is this. We can see that there is a movement from 9 a.m. to 10 a.m. The price went down. Okay, that's the most basic reading of a candlestick. The most basic reading. So let's see some example right here. If we can, I guess the best would be Bitcoin because it will be much more volatile. hmm So for just a minute, guys, let's see. Okay, let's do an analysis. So right now we are in a 1 minute chart. So per candle in here represents 1 minute. All right, so 1 minute. Now we have, if you see on the other side right here, we have a timer, a countdown. So I want you to look at that. As long as the timer has not closed or got over or the candle haven't closed yet, you cannot say, oh, it's bullish, oh, now it's bearish. No, it can literally take 2 or 3 seconds only. That right now it's going bullish, right? But in a moment it can literally drop and close it there. Now the sentiment is different. So it's really important to wait, always wait for the candlestick to close. All right, so right here, if you see, guys, miss, those candlesticks doesn't have wicks. All right, so meaning the price did not went around that level. Yeah, that is possible. So like this one, if we zoom in around this area, this candlestick right here, there's a small wick to the downside only, but then a really strong movement to the upside. Okay, so now we have the opening. Can you see we have the opening of the session right here at this body? Let me, okay, open right there. And now the price is moving down, yes? So that is a bearish movement for us. So now it's spiking up. Can you see it went all the way till here? And it tells us that the price went all the way till that level. Okay? So now it's going up, going up. We have 10 minutes, 8 seconds for the candle to close. 6, 5. Can you see it pushed to the upside? But then, the sellers are taking in. We're in, we close near to where we open. So later we'll talk about this, okay, this candlestick. So the moment we close, new candle session opens. And right around here is the opening. Now market is going down. Yeah. So just anticipating for that now. 40 seconds before it closes. So this one is an example, guys. We will have those lessons, okay, for familiarity with the. Mhm. It's an example of a spinning top, okay. So if you can see, miss, the body is so small, and then the wicks are so, it's almost equal, actually equal type of length. So we'll talk about that. Right here, there's no wicks to the upside, so you can say, what can you conclude, guys? The pressure is to the downside. Sellers are what? Sellers are in control. Okay, now the buyers are, fighting back up. Can you guys now see? It's just two guys fighting in here. Buyers, sellers, or bulls or bears. That's it. All right, so going back, I hope that shows the idea of the opening and closing of a session. So, guys, miss, how does this one works then if I open the 2 minute? So, if you are in a 2 minute candle, your 1 minute right here, one, two, it will be one candle only in a 2 minute session. So, if you are in a 15 minute, it needs what? Okay, I'll count from here. One, two. Can you see the bars, guys? So let's count all the way till 15. Now, this much bars on the 1 minute, it is just one candlestick in a 15 minute. So let's see. Can you see? It's just one. Ito lang. Ito, right here. Yeah, it's one candlestick. So goes on and on. Now for the 1 hour, it needs how many? 15 minutes. It needs four, right? So let's just count this one right here. One, two, three, four. Okay. Uh-huh. Okay, can you see? There's also like annotation in here that it is equivalent to a 1 hour session. So on 1 hour, it's just one candle. So if we think about 1 hour, how many 1 minute in there? It's 60 candles, diba? So that's really big. So now me opening up the 60 minutes, okay, looks like this. So we're gonna be having lessons with time frames. Very important lesson, guys. Time frames. So yeah, so again, those are the sessions for you. Let me go back right here. Okay, so let me now discuss right here, because we saw some candlesticks wherein like the body is so small. So I'll tell you the psychology of it. Remember I mentioned earlier, by candlesticks, Homo managed to say that there is psychology in the market. There is fear. There is like reversal, all of that. He literally managed to see all of those. So for example, let's just take ignore. I want you to ignore the color. Yes, it is bearish. It's color red, but I want you to ignore the color. All right. So right here we have the body again. But then let me ask you, where does the body open since it is a bearish candle? Obviously at the top. That is the opening session. Where did the session close? Right here. Can you see, guys? It is almost, they are almost, near to each other. So now if I'll put in numbers right around here, you can literally put or 2.5, and then it closed at 2.3. Okay, not that much difference. It's almost at where it started. And not only that, you have to take note of the wicks. Um, Now, this is where the buyers and the sellers play comes in, the psychology behind this. So we got the market open. The buyers, we can see that, oh, buyers had a really good pressure to the upside. So, this is why I tell you earlier, do not assume that the market is bullish just because of this. Always wait for the candle to close. All right. So now market going up, up, but during in the middle of the session, let's say this one is a 1 hour session, we have like 30 minutes before it closes down. The sellers, okay, took over. And they managed to push the price all the way down. Now you're thinking, oh no, it's bearish. No, it's bearish. But then a minute or two, let's say, during this into the session, about to close, 1 minute, 30 seconds, 15 seconds, 1 second to go, closed. Can you see? Let me ask you again, buyers go up, sellers go down, buyers go up. Is someone did someone won in this session? Or would you agree that they are what? They are 50-50. Yeah? In terms of strength, it's 50-50. But I'll show you one thing right here. Eto. A candlestick that looks like this with a wick that is, literally small. So obviously we can see it's bullish. It opened around here and then it closed around there. So let me do my arrow. Okay, we go up, perhaps go down, go up, perhaps go down. But when the session close, we close above here. Can you tell me, is this one 50-50? Or can we say that 95% the bulls or the buyers won this session? Or this is their session, 95% buyers. Yeah? This candle is very what? It is very bullish. So let me write that down. Very bullish. So this candle, what is this one then? Right? This one falls under, by textbook, they call it neutral. For me, it is sign of reversal. It can be sign of reversal depending on the context. Okay? Depending on the context of the market. So one thing right here also that I would like to add for your candlestick is this guy. Doesn't matter what color, guys, okay? Ignore the color now. But let's just talk about the psychology from here. Candlesticks is, I can say, 90% psychology, nothing more. And it's a really beautiful price action tool to study. And yeah, this alone with the market structure is enough to make you money in the market, guys. Trust me. So yeah, candlestick right here. We have the opening right around this area. Yes. Market go up. So the sellers push the price all the way down during this session. So we can say, oh, sellers are so strong. But when the session is about to get over, or let's say in the middle of the session, the buyers manage to push the price back up to where it started. So, what do you guys think what happened during the session? Yes, the sellers are there, but don't you think that the buyers are also protecting their territory? And they managed to do so. Yeah? Can you see this? It's like a spring, like this, and then goes up. So if you see that in the movement of the market, those dumps that you see, guys, parang ganyan, yeah, in a candlestick form, it looks like this. So by the way, this candlestick has a name, huh? This one is what we call the pin bar, or other calls it hammer. I'm just, I guess I just feel old now because, we used to call this one pin bar. Now, basically, people just call this hammer. Yeah, so right here, on the other hand, um, this one, we got the opening, right here. Market go up. Oh, buyers are too strong. But then sellers comes in, drop the price all the way down till here. Buyers try to reclaim it, but not much. Can you see? Now it looks like that. Yeah, looks like a pin bar. So let me show you guys some examples in you know in the daily. It would be much better because on the lower time frame it's there's too much noise. There's too much noise. So ignore right now all of this uh what do you call this one, this annotation that I am, you guys can see. Let's try this one. Okay, Bitcoin, Binance, USDT. Let's open the weekly. Okay, weekly. Let's open the daily now. All right, so again, can you see this one? Right around this area, this candlestick. Ito, this one. Remember, I told you this one is considered a very bearish candlestick. There's no bullishness into it. 95% it's bearish. Similarly to the previous candlestick, it's just a solid body. So that's it. When you see a solid body, na candlestick, it represents a strong momentum to the downside. Now, if you see candlesticks with long wicks, can you imagine this guy, huh? This guy was coming from a strong down to the downside. But then, remember this guy, 50-50, the 50-50 guy, the 50-50 candlestick, what happened? He literally managed to push he literally managed to, wait lang, pause. Yeah, okay, take a break. Yeah, so neutrality is there. Market is now, stopping. So very candlesticks is very beautiful, right? And it's very powerful at the same time. So like this. Uh-huh. Anyway, so next session, today I just want you to go over your charts, and then I want you to look at the 1 minute session so you can see and literally study the right here, 38 seconds now. I would just want you to get familiar with the closing and then the opening of session and the wicks. Okay, you know what the wicks represents, because that is how it is also on the higher time frame, 1 hour, 4 hour, the daily, the opening, the closing of the session. And I just want you to ask why is it happening. That's the thing with trading. We don't just, I don't want you guys to be another trader who just like absorb, knowledge, theory knowledge in the market. I mean, in the internet. Oh, this is bullish. Oh, this is bearish. Why? I always want you to have that, ano na, as you are now my student. So I want you to always ask, why is it happening? Why? Okay, so now we have the opening, we have the sellers going down. 45 minutes into, closing of the session. Let's see what happens. But yes, this is the exercise that I want you to do. And next session, I will be sharing to you my personal candlesticks that I use in my market, especially scalping daily. So if you guys are interested about that, yeah, see me tomorrow. I'll share that. And if you have any family members or friends who are interested into trading, you can yeah, just share my videos links to them. It's free, guys. Doesn't matter if they don't know trading at all, because I have those lessons since part one, for beginners, how to open accounts and everything. Everything is there. Okay, so that's it. If you guys like this, no, just like it. I always check it at the end of the day. It's just really nice to see. All right, so I'll see you guys tomorrow. Thank you for being here this morning. Just do, okay, the activity that I asked you to do, and yeah, we'll have the continuation of it tomorrow. Okay, take care, everyone. Bye bye.